Bloomberg Audio Studios. Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Google's AI bet is paying off, shares surging on the company's cloud growth.
Plus, BYD beats Tesla on quarterly revenue for the first time in the battle between the two EV giants.
And Supermicro shares plunge after EY resigns as the auditor to the troubled server maker. But first, Ed.
Yeah, straight to that top story. Supermicro is a server maker. It takes those high-performance GPUs from names like NVIDIA and AMD, packages them up for data centers. EY, its auditor, has resigned, citing concerns about the company's ethics, its integrity, and specifically management and the audit committee. The stock is down more than 30%. That puts it on track for its biggest drop since October of 2018. This is complex, and there is a backstory and a series of events that went on with Supermicro. Let's bring in Bloomberg's Brody Ford to discuss. EY told us about this, Brody, in a regulatory filing. First off, what did they say?
Yes, these are some words that you never want to hear from your auditor, right? We only got a snippet of the resignation letter, but effectively EY said that they received some information that made them feel that they could not continue with this. And in addition, they felt that there was information they weren't getting, right? So there was something that made them feel that things were not right, and that they said they weren't willing to put their name behind reports that came out from this management committee. Obviously, investors have to read a bit of tea leaves here, but they're not exactly mincing words. It doesn't look great for a company that's financials are on pause. We are waiting to see them.
Yeah.
And they say that they are not going to restate, but clearly the shares today, there's anxiety that they will.
Right.
Brody, to the point of tea leaves, this tea has been being made for a long time. We've had the Hindenburg research. We've had many people calling out concerns in this way.
Yeah, and I mean, even going back to 2020, Supermicro paid to settle claims from the SEC about accounting issues, right? And so there has been these kind of murmurs for a little while that Supermicro had some accounting issues that were going on. As you said, there was a large Hindenburg report. About a month later, the company said that, hey, we're going to, delay our annual filing. A very rare step of a company of this scale. It's something you do not see very often, and when you do, often there are issues at the end. Not to say that there are. We're still waiting to see.
Yes.
But yes, this has been kind of bubbling for a while, and this is certainly a moment where the pot seems to be tipping.
Okay, I just want to do this. It's important for our audience. Supermicro settled an accounting probe in 2020 with the SEC, but in April of this year, a former employee accused them through litigation of exaggerating or misstating revenue. Then you had the Hindenburg report in August, and then last month the stock sank because of reports that the DOJ is investigating. That's the background, but we care about Supermicro because of its role in AI infrastructure. Explain that part, Brody.
Yes, very expert history there. I appreciate you giving that in simple English. But we care about Supermicro because all of a sudden everybody needs to run these advanced workflows for AI, and it requires much more powerful servers. And there's really three companies that are selling these right now, right? It's HPE, Dell, and Supermicro. And so Supermicro this year has seen an incredible ramp in revenue. There are debates over the margins of some of that revenue because it requires these super expensive chips. But the server makers, which were somewhat of a sleepier segment of the tech industry maybe 2 years ago, have really come into the center of the zeitgeist, which makes this whole disruption kind of all the more, cinematic.
Cinema is what potentially we'll get on November the 5th, not because it's election day only, but because that is when we will see the earnings being restated, we understand, by the company. As you mentioned before, Brody, Supermicro does not expect the issues to lead to revisions in previously issued financials. We want to thank you, Brody Ford. Now, we've got a lot to digest today. Alphabet up 5%. We were higher than this earlier, but we surged on the back of course, AI paying off for Alphabet. Look, they might not be buying all their chips from AMD at the moment, it would seem, but they are investing, they're raising their capital expenditure, but it's paying off dividends. People are really buying into the cloud offering, a 35% growth in cloud. Let's just see what the CEO, Sundar Pichai, was particularly pleased about in terms of adoption of AI offerings. Take a listen.
I'm very pleased with our growth. This business has real momentum and the overall opportunity is increasing as customers embrace Gen AI. We generated Q3 revenues of $11.4 billion, up 35% over last year with operating margins of 17%.
Let's get an investor take. Mel Lagomasino is with us, CEO of We Family Offices. AI paying off for some, not others. Let's just hear about Alphabet's perspective.
Well, I definitely think one of the interesting things is everybody was worried about how much money they were spending on AI, and now they're using AI. And I heard their CFO speak yesterday talking about how they're going to be using AI to actually become more productive and reduce expenses. So I think they're already starting to become more productive using AI itself.
Using AI, managing to build up in terms of the cloud offering. We're also seeing not much competition eating into their search offering. Are they going to manage to keep that moat there?
Well, and I think with the search offering, and Sundar was talking about that yesterday, customers are asking more questions, they're asking more important questions, more complex questions, and AI is delivering. And so I think the opportunity is tremendous.
Mel, final question on Alphabet, but sort of looking ahead as well to Microsoft and later Amazon. The calculus is the same, right? You look at capital expenditures going forward and then decide if it's showing up in revenue growth and bottom line growth in terms of AI. Do you see that with Google?
Yes, I do see that with Google, and I see it with the other two as well. I think we sort of underestimate just the incredible impact of AI in terms of productivity and efficiency in these companies, as well as in revenue growth.
AMD is going to do about $12 billion of data center sales this year. NVIDIA is going to do $110 billion. What do you make of AMD?
I think they've got to catch up.
Extrapolate?
Opportunities there.
Okay, let's talk about the opportunities that are there, because is it that the market just wants too much too quickly from Lisa Su? Because she's been pointing that 2025 is where they're making inroads. She anticipates that they're making big moves. Analysts call out the Middle East in particular going well. They talk about Meta being a key, buyer of AMD, they think at least. Is that likely to be where they need to make the inroads?
I think how you manage the narrative is very important. And I think that the street tends to get ahead, whether it's about interest rates, whether it's about interest rates or revenue or whatever. And I think that's a little bit of the story here. She's been signaling what actually has happened, but the market wanted more.
It's a really interesting time to be a technology journalist, and I imagine an investor in the technology sector. I note that Google said the election was a tailwind for their search business and other parts. Try and tie that all together for us. If you're an investor this week looking at the sector, where's your attention focused?
I'm not focused on the election at all. I'm focused on the long-term tailwinds for the technology sector and for risk assets in general. All we get is good news. We have sunny skies out there. Look at the GDP report this morning, up 2.8%. Look at the employment report this morning. Interest rates are going to come down. Maybe not as fast as the market wanted, but they're going to come down. The housing market, housing sales are actually up. Everything that we have in the economy, all the drivers of the economy are pointing green. And so I think it's not about the election. Actually, the only thing that I think can mess up this sunny outlook is mistakes that politicians might make. Because when we look at the fundamentals of economic growth, they're all there. The U.S. economy is in a fantastic space. And from an investor perspective, no matter whether you're going to invest in fixed income, in real estate, in the equity markets, it's all green light ahead.
Are these valuations within NVIDIA trading at 49 times future earnings the right level for these green skies, the outlook of being a positive one?
Well, it depends how long your timeline is. I mean, if I wouldn't be without NVIDIA in my portfolio. I wouldn't be without any of these hyperscalers in my portfolio because that's the future. And you buy them and you hold them.
Oh, if we had more time, I would ask you how on earth you know what's going to happen in the world in 2027, 2028. But we don't. So we'll save it for next time. Okay. Mel Lagomasino, CEO of We Family Office. Thank you. Okay, other earnings that we're watching. Reddit, in particular, its fiscal fourth quarter outlook. Yes, that is a stock that's up 41% in the session. Yes, it was a stock that post-IPO in March was already up 140%. And basically, they're making money in different ways. The ad business is strong, but also there's the data licensing and AI part. It's a pretty astonishing jump. And a lot of optimism that Reddit will continue to grow. Even though Caro points out something interesting, the user base, if you compare it to like a Snap, very small. They're just good at squeezing dollars out of them.
With a market cap of now in excess of 21 billion. Extraordinary, Ed. Meanwhile, coming up, another earnings story. BYD, it's now beating Tesla on quarterly revenue for the first time. We'll have all the details. This is Bloomberg Technology. The European Union has imposed those higher tariffs of up to 45% on electric vehicles from China. It's ratcheting up trade tensions between the world's leading export powers. The regulation was published in the EU's official journal last night, going into force today after months of negotiations, Ed.
Yeah, let's stick with EVs. Chinese clean energy vehicle giant BYD posted quarterly sales that eclipsed Tesla's for the first time. But the race to dominate the EV market is very much still on. Bloomberg's Danny Lee is still awake for us in Hong Kong. And when I posted on social media about this metric, many would point out this is not apples to apples, right? Because you need to explain to us, Danny, that within those BYD sales include plug-in hybrids, and the scales are completely different. What did we learn in the quarter just gone?
I mean, we learned in the quarter how BYD is continuing to dominate the China market where it gets most of its sales. But when you look at how BYD and Tesla are both building out their electric vehicles, BYD obviously has its hybrids, and so it has a greater advantage, and particularly at a time when demand is skewed when it comes to electric vehicles and hybrids, and the infrastructure is not necessarily always there around the world. But clearly, when you look at how BYD is doing on a per employee basis, Tesla earns 6 times more per employee. So as much as the figure shows a new landmark for BYD, clearly there are still other metrics to show just how efficient Tesla is. And you know, whether you get those who support Musk, those who are big fans of Tesla who point out otherwise, clearly it's still a good run for BYD. We had that run last year of them eclipsing pure EV sales, but this time on revenue.
Talk about that vertical integration, though, that we do see with BYD and its supply chain. Can it wring out more efficiencies? Can it start to produce more per capita?
It's already got the efficiencies there, and what it is doing now, particularly with its 900,000 employees, is scale. And what it's doing is to try and build as many cars as possible, not just in China, but now around the world with all the factories it's committed to. So, it's got the efficiency there, and now it can use it to its advantage. And that is what is scaring the European and US automakers who are really struggling with their EV transition. But when you look at Tesla and BYD combined, the might of them, they can show that profitable path to getting to that EV transition, which the others out there, the legacy automakers, are struggling, which is why you see Tesla and BYD at 1 and 3 in terms of valuations.
It is hard to compare them. I look at gross margin, for example, where like BYD in the quarter was near to 22% and Tesla just under 20%. But again, it's not apples to apples. Many point out, well, Tesla's an AI and robotics company and it's investing there. How is BYD different? You know, what are its product lines? Where is it moving toward?
BYD has very much focused itself on the product, the car itself, and so it doesn't necessarily have those wildly big evaluations that Tesla has with that, full self-driving that it's been pushing constantly. So BYD is starting to think about how it's looking to be more savvy with its digital skills, because on the roads in China, it does have this level of automation which could match Tesla, frankly, and so with its scale in China, it's all its learnings perhaps that can be extrapolated into something more meaningful in the long run.
More than $800 billion valuation for Tesla, just over $100 billion. For BYD, Danny Lee stays late for us. We thank you. Now, despite more than 6 years of US tariffs, export controls, financial sanctions, China is making steady progress in positioning itself to dominate the industries of the future, like the one we were just discussing. There's some new research by Bloomberg Economics and Bloomberg Intelligence diving into 13 key technologies, and it shows that China achieved a global leadership position in 5 of them, catching up fast in 7 others. We're pleased to welcome to the show the author of this piece, Gerard DePipio from Bloomberg Economics, who takes part in the report. And Gerard, just outline the 5 where they're dominant and the areas that they're growing.
Right, so we looked with our Bloomberg Intelligence and Economics colleagues at 13 key technologies that are part of China's Made in China 25 initiative from about 10 years ago. The 5 areas where China is clearly leading as of this year would be drones, high-speed rail, EVs, as you were just discussing, solar panels, and graphene, so some advanced materials. Where they're competitive would be things like semiconductors, AI, machine tools, LNG carriers. They have like a big ship target, and drugs like pharmaceuticals. Where they're really behind is commercial aircraft.
Interesting. Gerard, you just read out the sort of dream smorgasbord of Bloomberg Technology stuff. I think one thing we reflect on in the show is that some of those key areas, right, semiconductors, even drones and EV, it's very policy focused. In other words, the government in China change their mind, but they're often willing to support those industries through finance or policy to make them successful.
Indeed. I mean, industrial policy is a big part of it. China's new energy vehicle targets and plans go back to around 2009, so they predate Made in China 25. How they do this, it's hard to quantify, but there are a lot of subsidies for buyers, for firms. There's state-backed credit, state-backed investment funds, government procurement, et cetera. But I think BYD is a good example. So the EV sector clearly benefited from Chinese industrial policy, but the industrial policy also didn't pick winners, so to speak. BYD was the one that rose to the top, in part because consumers were ultimately the ones deciding, and now it is a globally competitive firm.
Let's just talk about what this means for the US as well, because the US has been trying to prevent great strides in certain areas of technology. AI, chips comes first to mind, by limiting trade from the US, but also from its allies. What does this do if China gets there anyway?
The U.S. measures, I mean, you're right, so the tariffs are kind of more macro in terms of hitting many things. The export controls are very much focused on advanced semiconductors and things related to that, like artificial intelligence. The U.S. concern, as articulated by Jake Sullivan recently, is basically that they're afraid that China having an advanced lead in these things will have a military application, particularly for things like artificial intelligence. But there's also an economic side, because these are the industries of the future, and from a competitiveness perspective, especially if you think China is benefiting from its own industrial policy, the U.S. thinks, you know, in a sense, it's, quote, unfair, and that they don't want to be left behind.
Gerard, let's do semiconductors as one final case study, please, partly because it's also been in the news cycle, right? Yes, US export controls, but China's responded and tried to champion specific names. What did your research find in that space?
So, I mean, China's main fab is SMIC, right? And SMIC is sort of their TSMC equivalent. It receives heavy subsidies, but then there are other firms like Huawei, which is ultimately buying the chips that they're making, that are also being state supported. So in general, I think the U.S. export controls have probably done less damage than many in the U.S. government would have hoped 2 years ago. China is still making strides, but it's also clear that, or at least maybe debatable, how good those strides are. I mean, even recently, Bloomberg was reporting that maybe Huawei was getting chips from TSMC through a carve-out, right? So there's still leakage in the export controls, and this is something that the Biden administration in its final days is looking to address.
Gerard DePipio from Bloomberg Economics, just incredible. Thank you so much. Really appreciate it.
Time now for Talking Tech. First up, Elon Musk's startup XAI is seeking new funding at a roughly $40 billion valuation, according to a person familiar with the matter. Now, the company's valuation was $24 billion, including the $6 billion raised during its last funding round back in May. This week, Musk said that his aim was to double XAI's access to compute, of course, the resource that fuels artificial intelligence. Plus, OpenAI is working with Broadcom to develop a custom AI chip focused on running AI models after training. The chips will run AI software that responds to user requests and is expected to be in some high demand. Meanwhile, Apple, again this hour, unveiling an updated MacBook Pro lineup with new M4 chips, looking to entice shoppers with speedier processing and, of course, AI capabilities. It's part of a flurry of Mac upgrades this week. The company also released Apple Intelligence, its new AI platform, earlier in the week. Ed, what are you watching?
Supermicro, the server maker, again, reminder it's down significantly, biggest drop since 2018. EY, its auditor, resigned. It's concerned about ethics and integrity of the management team and the audit committee. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Let's get back to the technology earnings story. Social media, kind of a focus. Snap's up the most in 6 months. User growth looks good. Sales in the quarter gone above expectations. And it's like they've done a lot of work on advertising to make them more relevant. They're getting rewarded for that. Also, Reddit, biggest jump since IPO day, March 21st. A strong outlook for the holiday quarter. Again, ad business, but of course they have the data licensing side with AI as well. We're going to talk about that in just a moment. And then Meta up 0.8% I think this is going to be a mega print. You know, Meta, the social media company, Meta, the AI company, Meta, the biggest runner of data centers that no one talks about, that kind of stuff, Garrett.
Someone talks about all of it. We're pleased to have Bloomberg's Asia Counts across a flurry of social media moves. Let's just start with Snap, because they are managing to show that they can still get growth outside of the US, it seems to mainly be, and also people subscribing.
Yeah, I mean, the Snap story is really interesting. As you mentioned earlier, they tend to have a lot of volatility. Sometimes they're not always rewarded for the investments that they're making in their advertising business, but they put a lot of money, spent a lot of money on artificial intelligence and machine learning. So it really is coming to fruition across multiple areas. Better targeting ads, better recommending video content. And then, as you mentioned, subscriptions. Subscription revenue is now about $123 million in the quarter, which is 8 to 9% of the revenue. So they're one of the few social media companies that's really been able to benefit from subscriptions and really turn that into a notable business.
Hey, so let's talk about Reddit. I mean, a bit of a surprise in the session, a 40% gain on the stock. You spoke to Steve Huffman, the CEO. What did we learn about how it's going and what the Reddit platform is doing to be different?
I mean, of course, the simple advertising story, right? They've really been able to convince advertisers to actually buy ads. So part of that is expanding Reddit to other languages so they can have more users and more advertisers across the world. Part of it is just investing in artificial intelligence, machine learning, better targeting ads, and then educating the market. Reddit is very different than other social media platforms. You target based off of topics, not necessarily personal data. A lot of users are anonymous. So they've really had to do a lot of educating the market, and that's seemed to pay off. And then, of course, there's the AI story, selling their data to AI companies, having partnerships with OpenAI and Google. That's really pushing their revenue over the edge. And then, again, coming into the holiday quarter, huge beat on what they're forecasting for the holiday quarter. So all that is really led to that stock rise.
It's just so interesting, though. Like Ed and I were having this back and forth earlier about when you look at the underlying amount of users of both of these platforms. We won't even get into Meta quite yet, but Reddit's got, just over 97 million users. Snap has way more. And they also have far bigger revenue. I mean, 4 times that of Reddit, yet their market capitalizations are about the same at this level. Where is the market seeing the future potential of Reddit versus Snap?
I think it really comes down to that data licensing business. So when I was talking to Steve yesterday, one of the things he mentioned was, he said every large language model has used Reddit data to train. And so he's like, that right there shows you the potential of the value of the data on the site. So I think investors are really seeing that. Some investors are projecting as much as $600 million a year in data licensing revenue, which is huge. And so I think part of it's that. And then, Snap has been public for a lot longer, so the expectation may be a little bit higher, right? Of course, Reddit just went public in March. They beat expectations every quarter, and so we'll see if they can continue to do that.
The biggest of them all in the social media context, but a lot more, is Meta after the bell today. What's going to happen?
I expect revenue to beat expectations. I mean, they're definitely going to have a higher bar. Their peers, as we just talked about, have done really well. Google also did really well in their earnings. And so I think the bar is going to be high, but over the past quarters, they've achieved double-digit revenue growth, oftentimes as much as 20% in the quarter. So we'll expect that. And then we'll expect to hear more about the AI story. So whether it's their AI video generator, movie gen that they just announced, they have new AI tools for creators, for advertisers. I mean, they've really doubled down on finding ways to put AI in front of users. And then not even to mention their Meta AI assistant, which has 500 million users that are chatting with AI across Facebook and Instagram. So we'll expect to see that, expect to hear them continue to talk about how they're getting a return on their investments in AI. And as you mentioned, they have tons of data centers. They spend a lot of money on infrastructure. And so part of the story too will be, will they not spook investors with how much they're spending on infrastructure like they did a couple quarters ago? Investors were sort of worried about how much money they were spending there. So we'll be looking for all those things.
Stay tuned after the market close. Bloomberg's Asia counts on a trio of earnings. Thank you very much. Let's keep talking about technology earnings with Jefferies analyst Brent Till. And I think that if you're trying to find the common denominator, particularly if it's like the hyperscalers, Meta, etc., for me, it's that the calculus is the same as last quarter, right? CapEx, money going in, how much money's coming out, particularly in AI. Have you seen some good evidence that that's the case so far?
Well, we're early in the curve, so the revenue's not coming in because remember, for Microsoft, we're on a recurring subscription model. So even if they plowed $10 into AI today, you're paying a monthly fee. So no, we haven't, but I think we're seeing proof that if you add up all the hyperscalers at their total bookings relative to their CapEx spend, their actual booking numbers accelerated. That's not all AI, but we are seeing that return. We're also seeing it in pricing. I mean, Microsoft's doubled the cost of Office. So if you're paying $30 per seat for Office and you just doubled your AI, it doesn't cost double that to serve. They're making a lot of money. Look at last year. Amy Hood gave you 100 basis points of margin improvement in the beginning of AI, and this year they're guiding to about 100 basis points of headwind. But this isn't like they're losing money, right? They made money in year one in AI. These are incredible numbers. So this isn't a wasteland, and this is the number one question we're getting. Where's all this capital going? Well, you can see in the booking number, you can see it in the margins, you can see it now in the incremental revenue. You can see it in the pricing, and then you can start to see it in the customer case studies.
Brent, you're excited about Microsoft, I can tell. We're all excited about all of the earnings. The thing about Microsoft, they've always been good at selling software that you can otherwise get for free somewhere else. Meta is a different beast, right? You have this buy on Meta, and in the AI story, it's interesting, the business model. I've been using the Ray-Ban Metas for about a month now. That's how I use Meta AI. What are you expecting in the earnings print, in the sort of belief that they can demonstrate this future business model?
Well, I think, again, we're super early across the entire industry when you think about AI in applications, right? We're not early in AI and infrastructure. We see it in all NVIDIA, all the numbers, right? You see it. It's going to be a delayed reaction. So I want to be careful. You're not going to solve, this isn't going to pop out of the cake and surprise everyone. This is going to be slow, steady, a gradual ramp. We've said, this is going to be game changing. So I'm a believer in Meta. I think ultimately over time, we as users will get a better experience because of AI. The advertisers, which pay the bill, again, none of us pay the bill to Meta, right? It's all ad driven. If you can create an easier ad campaign, and do it quickly and do it more cost efficiently, advertisers are going to stampede because all the users are going to stay there and more people are going to be there because the experience is so good. So I think it's a phased approach. I don't think it's going to be overnight success, but I think what Zuck has been doing, he's very confident, right? You can see it in his style, his t-shirt, his necklace, his hair. You can just see it. He's not. He's got
a stylist, man. He's got himself a good stylist, and we all love to see it. I'm a big approver and appreciator. But Brent, what's also interesting is there was some news as to whether or not Meta AI is ultimately trying to build its own search, real-time search within its Meta AI offering, becoming less dependent on the likes of Bing, which is Microsoft's, of Google Search, which of course is Alphabet's. How much do you think that these frenemies will continue to use each other? Of course, Meta in some ways, when it depends on access to compute, or just building its own and going to NVIDIA and the others, the ecosystem.
Meta having its own search is a no-brainer. I mean, think about it. Like, if you buy a golf shirt or you buy something for your house and you want to find something else on the platform, why can't you just go on their platform and search for it? It's not a good search experience today. It should be a better search experience. So is it an area that they can improve upon? Does that mean I'm not going to Google Maps because I'm going from San Francisco down to the Valley to visit a company and I'm going to jump on their, I'm not going to search there for traffic and all the other things. But I think the experience is going to get better because it's not great right now. And there's no question, all the data that's trapped in that platform, I mean, it's really, really hard to find something that you've seen and go back and try to find it on Meta. The experience is going to get better, but it's not going to box out Google. It's not going to box out Perplexity. It's not going to change, I think, the opportunity for the others. And we saw that in Google's number, right? I mean,
let's go there.
Double-digit.
Talk to us about Alphabet. Talk to us about how they're managing to finally reap the dividends, the rewards of an AI investment.
Well, I think you go back to, it's not all AI driven, which is you get in your car, you use Waze to get to work. You effectively looking for a restaurant. What are the hours? You don't go to other engines like Perplexity of other places for that information. You may want to say, how do I stop my washer dryer from blinking? I'll go to Perplexity and do that. I don't need to go to Google anymore. But I'm not. Like, I think the thing is we're having a higher query volume, and then all of us are becoming more comfortable that they're different tools. And so we're just increasing our usage across all these platforms. And so it's like everyone wants hey, this vendor's gonna die and this vendor's gonna win. Like, I think everyone seems to be then in a good spot are winning. And that is, again, these bigger platforms, right? AI needs three things: capital, users, and data. And when you think about all the big platforms, Amazon, Google, Microsoft, they all have that Meta, incredible usage, obviously. So our view is the big keep getting bigger, and it's a really boring storyline. Like, I wish I had a better storyline, but like, I'm sorry, but like, they're just going to keep getting bigger and better.
Regulators might have something to say about it, but for you, you've got to buy across the board on all those names. Jefferies analyst Brent Thill, we thank you so much for joining us today. Meanwhile, coming up, a look at the major impact of the results in the upcoming election could have on technology and innovation. Lyndon Melmed's joining us from BAL Government Strategies team. That's next. This is Bloomberg Technology. Conspiracy theorists who believe that Donald Trump won the 2020 election are making plans online to monitor and film polling places in swing states, a move that some groups argue amounts to voter suppression. Bloomberg's Jeff Stone has been reporting on this, joining us now. This is surrounding the messaging app Telegram in particular, where these conversations and views to meet are happening.
That's right, Caroline. Telegram is an incredibly popular app, certainly globally, and it's gained a lot more attention in the United States over the past couple of years. There's large communities, tens of thousands of people through the country, many of them in swing states, Georgia, Wisconsin, who are making plans and trying to coordinate to take efforts to do what they describe as stopping another stolen election.
So, Jeff, I'm not a Telegram user. It's a cloud-based messaging app, basically, right? Take that, explain literally what people are doing to communicate, but why it's noteworthy, why this is a news item in the context of this election.
This is important because the way that Facebook and formerly Twitter, now X, have, really removed a lot of conspiratorial and false election-related content over the past few years, that doesn't exist on Telegram. So Telegram was a Russia-founded app. It has nearly 1 billion users, and people communicate in large communities. So they're a lot like large group chats, almost like WhatsApp. Without that moderation, things can get pretty extreme and pretty radical. Sometimes there's calls for violence. And really, what's happening now is that some of these groups are circulating petitions. They are circulating calls for volunteers, looking for people who are willing to stand outside of ballot boxes in the middle of the night. Again, some places that are pretty key to the election.
And it's worth pointing out that in our reporting, Telegram's press team did not respond to a request for comment. Bloomberg's Jeff Stone. That's really important 1 week out. Thank you so much. Let's stay with the election and the technology industry. Immigration is one of the most hotly contested topics in the upcoming US election, but there's one area of general agreement. A recent Pew poll finds the vast majority of both Harris and Trump voters support allowing high-skilled immigrants into the country. For example, doctors, engineers, but also computer scientists. Let's discuss this with Lyndon Melmed. He's a partner at BAL and oversees the company's government strategies group. This is interesting. It is a policy topic at the heart of the election. But do you have a firm understanding of either candidate's position on this, even if the voting base agrees?
Well, first, thank you for having me on today. And you're correct that the asylum crisis on the border has certainly dominated the conversation. But behind the curtain, there is a lot of commonality across voters of both parties that high-skilled immigration is beneficial for the United States. And I think Americans understand immigration better than a lot of people give them credit for. They see CEOs, foreign-born CEOs at companies like Google, Uber, Chobani, and they know that they want those individuals investing and creating jobs in the United States. But this election will be the most consequential election for immigration policy, both in terms of that asylum crisis, but also for high-skilled immigration, because the candidates will implement very different policies, and that will affect how companies hire and attract and build out their talent pipelines.
Okay, so I'm an employer. I want to get access to AI talent. I need to go abroad for it. What can I anticipate? How do I need to align my business hiring with either outcome from the election?
Well, let's start with that. So, if President Trump is elected, we all recall back in 2016 that he put travel bans in place, and we are planning for that eventuality. So if he is elected again, we could see travel bans go into effect as early as the first week. They won't necessarily target AI specifically, but there could be peripheral damage, so to speak, if they target nationalities, China, for example, or just particular visa categories that employ a number of AI professionals in it. So really as early as the first week, we could see an impact on the ability to bring new AI talent into the United States. But that's only part of the story. I think approximately 2/3 of graduate students in AI fields are foreign-born. And what we are expecting is that there will be restrictions on the ability of companies to hire foreign-born talent out of U.S. universities. And that's on top of a broken system that already exists today. It's already very difficult to transition someone from a foreign student to a work visa, but it could get worse if Trump is elected.
We're just showing this brilliant chart of the top technology companies are the beneficiaries of H-1B visas. Amazon the most and Apple the fewest, based on this data from UCIS. You must know what the companies' attitudes are towards this. How active are they in this election cycle in impressing the importance of skilled labor to either candidate and either party?
Well, all the companies have been operating under a dysfunctional immigration system for as long as they've been around. And this isn't the first election that they have to prepare for different scenarios. And even within any particular administration, there's very competing views about how to implement immigration policy. So all of them are preparing for both eventualities and putting really the teams and people in place to be able to react. One thing to understand is that if President Trump is elected, a lot of those action plans will get started right away, during the lame duck period of time. There might be a small window to try and get some policies done under a Biden administration during those final few weeks that might be beneficial to those companies. But I think it's best to describe their activity going into this election as preparing for all eventualities. No one, of course, knows for sure how the election is going to play out in a few next week. But the companies are prepared from a workforce perspective. Probably the most difficult challenge for them is the fact that a lot of their foreign workers like to travel over the holidays, like all of us do. And that could be difficult for them to put in place quickly.
Lyndon Melmed, thank you so much, partner at BAL, who oversees the company's government strategies. More big tech earnings after the bell. Let's get to it. Bloomberg Intelligence senior analyst Mandeep Singh, who joins us now. You were just saying how the gargantuan beat that you saw out with Alphabet, is that going to be a read across to the Metas, to the Microsofts?
I mean, look, ad industry is doing well, and that's what we saw with Reddit, Snap, and Alphabet all calling that out. I think the magnitude of Google beat, that $2 billion on the top line, was pretty impressive. You're not going to see that sort of beat from Microsoft or Meta, if I had to take a guess. But clearly, I think with Alphabet specifically, their LLM integration across their family of apps with 2 billion plus users is what's driving, the positive sentiment today.
Mandy, really quick, do you see the market share split in cloud changing based on Google's progress?
It could, simply because, everyone is getting the same allocation of GPUs. So if Google is using more of their TPUs for training, they can have NVIDIA GPUs on their cloud that can generate revenue, whereas some of the other cloud providers are using it for their own training. So from that perspective, it'll be interesting to see if Azure prints more than 34% growth tonight, but anything less than that, I think, would be disappointing.
We have so much still to digest when it comes to these magnificent 5 for this week that are reporting, of course, just NVIDIA that we lack now for the next weeks to come. Bloomberg Intelligence senior analyst Mandeep Singh, love having him. Meanwhile, that does it for an extremely busy edition of Bloomberg Technology, Ed.
It was, and it's just going to continue. It's amazing there's so much focus on tech all the time. Recap on the podcast. You know where to find it online on those platforms and on the Bloomberg ones as well. Thank you, team in New York. Thank you, team here in San Francisco. Get some rest because there's a lot more to come. This is Bloomberg Technology.